We should be live right now. I'm just going to double check. Perfect. Looks like we are live. And let me just check some of these settings quick. All right. Does everything look good on your end?
Everything looks good on my end.
Perfect. What's up, guys?
Very nice. Welcome, everybody. Thank you, everybody, for joining. Today, I want to kind of be covering edgeful, and I really want to talk about this badass thing that can make these really awesome reports. They can pretty much generate a report on anything you can think of. It is the number one speculation app. I've never seen anything like this. I'm a huge fan of the product. I personally use it on a daily basis, and I have the CEO of edgeful on with us right now, André. And we're going to be asking André some questions about the platform overall and a bunch of different questions. We'll be briefly covering NVIDIA earnings as well for those who are here with that. And, I'm really looking forward towards having a nice stream. But, André, how are you doing today?
Good, man. Good. It's great to talk to you. It's always nice to kind of get different perspectives on edgeful and just kind of hear how different people use it. So typically, that earnings, like people love to use edgeful for earnings, and it's always interesting because some people trade futures exclusively, which obviously don't have earnings. So it's always nice to see kind of different perspectives on how people use this because there's really a million ways to use it. So it'll be good.
Yeah, so the one thing I gotta ask, and I'm sure a couple of other people are wondering the same, is what sparked this idea for edgeful? Was there a specific moment when you were in your trading career or when you were over at Goldman Sachs in the days and you thought, there's got to be a better way to organize this data and kind of see this information?
Yeah. So in the retail trading space, and even, I mean, realistically in like the institutional space, like there's really not anything that's very useful in terms of for retail traders. So one thing when I started trading, I was very curious about how do I determine a bias and how do I determine a bias when I get started in the day? So should I be bullish? Should I be bearish? I'm not really sure. So what I did was I started to go through a bunch of different strategies that would help me understand, okay, you should have a bullish bias today, and this is why. And the gap fill was one of the things that like instantly clicked with me. So the gap fill, for those of you who don't know, is just when price today opens above or below yesterday's closing price. And then the gap fill is when it comes back to touch yesterday's close. So I was like, oh, perfect. If we open above, I can target yesterday's close. If we open below, I can target yesterday's close. That gives me the bias every day. It gives me the target every day. Now, as I did the research on it to actually know how often does this happen, people online will just say that it happens 100% of the time, which is obviously not the case. Like nothing in trading is 100% of the time. So I bought a bunch of data, like raw data, put it into Excel and started actually calculating it myself. Now, I have certifications in Excel, working at Goldman Sachs and working at a hedge fund. That's where I've learned exactly how to use like literally every single feature on Excel. But what happens is Excel is not built for this type of analysis. So when you want to start filtering for weekdays and by gap size and by adding in all these other layers on top of your like quote unquote report, it becomes very clunky, especially for someone, or even for someone that has a ton of experience with it. So I know for a fact that people who don't have experience with it are really going to struggle trying to do this. So from there, I went online looking for an analysis software that would do this all for me. And what I signed up to literally everything available online, like any data analysis, technical analysis platforms. And what I found was really two main pieces. And the two main pieces were, one, you either needed to be like a developer, like a coder, which I am not, like I don't know how to program, or you need a like PhD level of analysis experience, which I don't have a PhD obviously, but I do have a lot of analysis experience. And all of the platforms were extremely antiquated. And for me, I was like, listen, I know a lot of people they don't know how to code, they don't have the analysis experience, and these actual interfaces are very bad, in my opinion. So what we wanted to build was a platform where you can get the data. It can be easy to use, so there's no barrier of entry in terms of like analysis experience. You don't need to be like a stats guy, and the interface is really nice. So it's actually like easy to navigate and easy to look at and like kind of play around with, which I think really brings down the barrier of entry for any new traders to go and trade with data on their side and not like just kind of YOLOing based on their emotions. Does that make sense?
That does make perfect sense to me.
Yeah.
And that's a great answer. I was looking to hear something exactly along those lines. And I gotta say, you used a great example of people how they love to say things. At one point, I gotta say I was personally guilty of it. I once said that Nvidia tends to trade higher into earnings, and my friend Emp actually was the one who corrected me, and he showed me the custom report that you guys have for Nvidia earnings, and it noticed that actually Nvidia tends to trade lower going into earnings as of the last 4 reports. So let me ask, I want to get into the Nvidia earnings a little bit here, but overall on this custom data report for Nvidia earnings, what is your personal opinion and what jumps out to you the most? And what would you really want to say towards the 150 people currently listening for regarding Nvidia earnings?
So, well, first of all, now, do you know actually just off the top of your head how many of them are options traders or they trade shares or anything along those lines? Like, are they mostly going to be options traders?
I'm gonna have to speculate. It's probably gonna be like 75-25, leaning towards the options traders.
Yeah. Okay. So one thing off the bat, like super high level, because I trade options too, super high level is that you need to be very careful about implied volatility if you're going to trade through an earnings announcement. So that means that if you're going to buy calls, like if you think that that price is going to rise and you're going to buy calls before earnings and hold them through earnings, you need to make sure that you can account for the implied volatility. And now, not to get into like the technicals of really what that means, but pretty much like you can be correct that price will rise, but the IV crush that happens after earnings, like the next day, could kill your position. So number one, I want to be very mindful about, be aware about the implied volatility, because even if you're directionally correct, you could still lose money on the trade. So that's important. Does that stand out to you? Like, does that resonate with you? Have you had an experience where the IV has killed your position?
I can't agree more with this is gem that you just dropped. I totally have seen many times, and I personally have experienced it where we do not reach the implied move and we do get IV crushed. That happens very frequently.
Yeah. So that for me, when you trade options, so, and by the way, for anyone who's not really sure what we're saying, implied volatility is just like kind of like the uncertainty or the volatility that you can expect. Now, when it's higher, the premiums actually, the options premiums become a lot more expensive. And then as it drops, as the implied volatility drops, the options will become cheaper. So if you buy, let's just say you buy calls when implied volatility is very high, and then the earnings come out, so the uncertainty goes away, and then the implied volatility is going to crush. Just based on the change in the implied volatility, the options premiums are going to get crushed too. So that's one thing that you really have to make sure is that you at least understand that only if, or mostly if, you're going to trade through earnings, because implied volatility will definitely spike right before and crush after. So you need to make sure that the move you're looking for is going to justify that move, like Stock Sniper said, exceed the implied move. So I hope I didn't get too technical off the start. This is not going to be a super technical stream, but I just wanted to really emphasize that because it is important, especially with options, and I'm trying to save you guys from taking losing trades in this case.
I absolutely love what you said there. I say that pretty frequently across the spaces, and I actually tweet out the implied move for every single name just to kind of give traders a warning or give traders something to expect, especially for the options guys out there. I kind of want to segue back over towards edgeful a little bit. And I want to ask, how do you decide what's the most important data for traders or what matters the most? Because there's so much noise in the market, and I know that edgeful supports stocks, futures, and Forex. How do you cut through it to focus on what's actually useful versus what's just noise? And that's probably 80% of the information across the market, is just random indicators or random things that kind of just tend to confuse retail traders.
Yeah, for sure. So one of the things that I always emphasize is right now we have over 100 reports. That is more reports than you could possibly need. And I actually don't recommend using all of them. I personally recommend having like a handful or maybe like 5 or like 7 at most that you're going to look at on a daily basis. 7 really being the top end of that area. But there is a piece of it where you can say, these things resonate with the way that I like to trade. So for example, I know that there are a lot of people that like ICT concepts, and there are a lot of people who don't like ICT concepts. They think, let's just say you don't like fair value gaps. That means that can rule out, for example, the fair value gap report, because it's something that doesn't, or like chart patterns, for example. Like if you're not going to look at engulfing candles, then this is immediately going to rule out what you like. But let's say you like the gap fill because every day it sets up, you know your target, you know your bias. You like the initial bounce because you don't like to trade the first hour of the session, and you like to have more of confirmation in the direction that we're going to go today. It's mostly about what fits your personality more than anything else. And just to be totally transparent, it is going to take a little bit of time to discover what you like and what you don't like. However, we do have a most popular reports section, which really encompasses like the scalper day trader across the board, whether you trade futures, whether you trade Forex or stocks or options. And I mean, you can, for anyone who's watching, like you can screenshot this list right here. This is more than enough. These are actually my personal bookmarks, but this is more than enough for what you need just to get started or to learn about. So you don't need that much to actually get started using edgeful, or actually just get started to trade with data on your side. But you need a few reports that kind of stand out to you to say, this is something that I'm interested in. This is something that resonates with me. And this is something that I like to trade. And it also, something that people don't really talk about, but it also fits your schedule. So I know a lot of people, they can trade in the morning, but they really can't stick to the screens all day because they have a job or they have to go pick up their kids from school or whatever else. You need to find the reports that fit your schedule too. Like if you can't stare at your screens all day, there are certain concepts like trading strategies you can't use. Now, there are a few other ones where you can use them. They're more like higher time frame, maybe a little more daily bias based, but everything is really personal. But if you want, you can go to this discover page on the top left, scroll all the way down and just go to the most popular right over here. So what I just did is I clicked on discover here at the top, scrolled all the way down and went to most popular. These are going to be like entry level reports that have super valuable concepts in them here. So that was kind of a long answer, but that's the way that I kind of like to frame it.
I think that was a great answer, and I got to personally say I'm a big fan of the gap fill and the initial balance. Those two reports I like to look at just about every day.
Yeah, for sure.
I'm going to ask, let's get a little creative here. Let's pretend you have a time machine right now, and you can go back to any point in your trading career. And now let's pretend you have the entire edgeful database and all of the software that you guys have to offer. You have this at any point when you're in your trading career.
Yeah.
What is one mistake that you made at some point in your trading career where if you had edgeful, it would have really helped you avoid this? And, I'm looking for kind of like a real story on something that happened.
100%. Okay. So I'm going to show a couple examples actually, and hopefully I can find a decent one. Perfect. Okay. So personally, when I first started trading, one thing that I always came into the markets with some sort of, before I had any data, I always came in because of the influence that I was absorbing from trying to learn from YouTube or learn from Twitter or learn from wherever. I always came in saying, this should happen because this person said. And let's look at the last 3 months for this gap fill on the gap down on SPY. I actually personally only, if I trade options, I'm trading SPY or SPX almost exclusively. Sometimes I'll trade Tesla. But you can actually see right here that in the last 3 months, only 48% of gaps down have filled. So something that I would have done going into a trading session is saying, oh yeah, but that guy said that 80% of the time this happens. So therefore, I'm going to take this trade, when in reality, it's more of a coin toss on whether it's going to happen today or not. And one thing that having this unconfirmed bias or some like emotional attachment to, like, even if we just go to a daily chart right now on SPY, to say, hey, the market is really extended. I'm going to be bearish every day because I believe the market needs to go down. That actually has no bearing and no indication on anything. So something that I literally used to do especially during this period right here. So this is obviously like the COVID, the crash of 2020. And then the market just ripped for pretty much a year straight, or almost like 2 years. I would come into the markets all the time saying, I'm expecting price to drop. There's no way that price isn't going to drop. There's no way prices are going to drop. And then the data would have showed in that time that we're in an uptrend. Why am I fighting with the data? Why are my emotions fighting with the data? So one thing truly that I can go back and say, stop coming into the markets with your emotions and with your gut feeling on what should or shouldn't happen, because it doesn't matter what should happen. As traders, we want to capitalize on what's happening now and ride the wave of this market environment. And that's what's really nice about this, is that it updates every day. So for me, now we're looking at the last 3 months. In the next 3 months, this data will be completely different. And as you can see, obviously there's a lot of different market environments, but one thing, if I could go back, time machine, is don't be so stubborn with your opinions, because your opinions are irrelevant. Does that make sense?
That makes perfect sense. I love that you said that. The market doesn't care about anyone's opinions. The market doesn't care about anyone's P&L. The market will totally humble you, especially if you think in the slightest way that the market even cares about that.
Yeah, 100%.
I'm going to have to ask, how do you see edgeful evolving, in say 4 or 5 years?
Yeah.
Are you guys thinking of incorporating AI? Are you looking to expand over towards new markets, or are you kind of really to look to strengthen and refine what's already working?
So in the next 4 or 5 years, definitely we want to introduce AI. Now, one thing that I'm going to say is that AI is not even close to at this stage where we are comfortable including it at this current moment. If you go to ChatGPT right now, or any other AI, whether it's Gemini or whatever else, it doesn't matter, and you ask it, can you do this analysis? Almost universally, I guarantee you that it will provide the wrong answer, but phrase it in a way that it is 100% right. Even right now, if you go to ChatGPT and you ask it, and this is relevant because the Super Bowl was a few weeks ago, what teams have won 2 consecutive Super Bowls? The AI will not say the Chiefs, which is hard to believe. But then if you ask it a follow-up question saying, what about the Chiefs? It'll say, oh yeah, the Chiefs won on these days. So the AI piece is definitely going to be integrated, but it is not nearly at the stage where we can actually release something where we can trust it enough, because obviously the data accuracy is like what we hold to the highest standard. So in that context, we're absolutely going to be introducing AI, but probably not at least for a year or two, just because it's just not where we want it to be. Now, in terms of other features, one thing that we definitely want to be able to do is allow users to create their own reports. So right now, the way that a user can come in and, like, let's say that you want to trade whatever, some report, some concept, like let's just say some ICT concept that you found online that you think is interesting, you want to see the data on it. The way that you can actually, as part of the plan, you can request a custom report right over here on the bottom right. You click this blue button, and then you see build a custom report. This is where you can come in and you can literally say, hey, I want to measure this, 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 and this, and we'll build a report for you. That is not like an instant process. Like, it takes a couple of weeks for us to build it out, to check it on different sessions, on different times, on different stocks, like all this other stuff, to make sure that there are no like anomalies that we're not catching. But eventually we want our traders to be able to come in and say, hey, I want to build this report and I want to build it right now, and I want to see all the data right now. So you can pick all the inputs, and then you can build it into this one thing, and instantly, without having to talk to us, you can do all of your own analysis, but in a way that is extremely intuitive. And you don't have to be an analyst. So one of our biggest priorities is our users don't need any analysis experience. You can come in, you can open this up, you can see the stats, you can go down, you can watch the explainer video, and you can take a trade based on that. When we evolve at all in any aspect of this product, we want it to maintain that level of ease of use. So that is another very big one. Now, in terms of any other markets, eventually we'll include options data, but to be honest, the options data market, like the actual getting that data, is pretty difficult and it's a little bit messy. So we're not too interested in getting the data there, but we also want this to be like and I've said this before on other streams, but we want edgeful to be the place where traders come to actually make money, where they can have all of the information they need, to be taking trades with data on their side and staying out of the trades that don't have any real edge. So that's kind of like three different things that we definitely want to do. And the last one, naturally, what a lot of people and a lot of our users are saying is that they want to build a strategy around this or build an algorithm, like specifically like automated trading. One thing that we're definitely going to be doing is, and that's going to be like the natural evolution, is having, like in this case, the gap fill, the one that's on my screen right now, having this where you can click a button and say, build me a strategy around this. And we can have some sort of integration where we give you a templated automated strategy where you can just plug in your broker. And then now we have all of the, like the executions, like everything will be automated based on what the data is saying, based on this, like your risk parameters, based on your account size, based on all of that. So it'll be completely automated. And that's obviously going to be a few years down the line.
I really like that, and I'm a huge fan for you guys kind of stepping into that one-stop shop kind of deal. I got to say I absolutely love that. And another thing that I really like about edgeful is that you guys kind of challenge your users to find something that you guys can't report. And I look at edgeful as like the best platform for any kind of speculation. Where you can really wonder anything, and edgeful can answer just about any question that I really can have. And if you guys can't, I see that I filled out a custom ticket before myself as well. And I think that that's absolutely awesome that users can really kind of request these custom reports. I have to say, and I have to ask, what is the weirdest or the most unexpected way you've seen someone use edgeful? And like I'm saying, something that's kind of completely out of pocket. I'm sure that you've monitored some things that the users have done. I'm sure there's got to be something that's like a little curveball that someone's done.
Yeah. So there is a lot of very unique. So on edgeful, specifically in the futures. So if I switch over to futures quick, I'll just switch over to ES. But you can create custom sessions here. So right now, the way that we have the futures is you can filter out, or you can pick specific sessions that you like to look at. There are futures traders in Asia and London that trade different sessions. And really the wildest stuff that I see is when people create custom sessions and then we'll just extract this crazy data from certain sessions that they look at. So they'll like pick some narrow session at some weird time and they'll say, oh, this happens 80-something% of the time during this time period. And that is like super unique to the instrument, like to the ticker that they're trading or to the actual like time that they pick. But some of these people are able to customize the reports in such a way that they're able to pull out like 80-90% like historical probabilities and start to actually use that in their trading based on some like 2 to 3 a.m. Eastern time like piece that they've discovered. And I don't know, it's just that to me is definitely the wildest stuff that I've seen. But across the board, our traders like don't do too much wild stuff outside of the custom sessions and like going super specific on different areas and different like specifically times of day. Does that make sense?
I was muted there for a second. Yeah, I think that's a great answer.
Yeah.
And I gotta say, and I have to give hats off and props to you guys for building this. This is just a plethora of information, that's really on edgeful. And I really find it very interesting the way that you kind of navigate this, and the way you kind of section off what's actually useful. With the entire stock market, and I really like that you guys have the most popular reports. I think that's an amazing feature also, and I think most traders should go in there. Let me ask, man. So like I have to say, with myself working in this industry, trading is an absolute roller coaster. We got wins, losses, it's just lots of stress. How do you stay sane running a company that is directly tied to the market?
So kind of crazy answer is that I've worked in finance my whole life. So I worked at a hedge fund, I worked at Goldman Sachs, and I immediately after Goldman, like I started to trade. And to me, I love the numbers side. And I love that this is like some infinite puzzle that is like never going to be solved, but just something that's like going to continuously challenge like me as a trader and us as a company to evolve with like, as the technology in this space evolves. Like this trading space is growing at such a fast pace now, like thanks to the younger generation wanting to trade, like thanks to Robinhood, thanks to like all these other firms that are making it, again, dropping the barrier of entry for people to really start to trade. But, this is like kind of a crazy, not really crazy thing to say, but I don't think anything easy is worth doing. So becoming a trader is definitely not easy. It's very simple, but it's not very easy because like the psychological piece of taking losses and like understanding that your edge doesn't play out over 1 or 2 trades, it plays out over 10 to 30 trades or even 100 trades. And that like resilience and that like mental callus that you build when you're a trader and being in this industry and being on this side of the desk, meaning like I'm the one building this analysis tool, is that we want to help people accelerate their learning curve and accelerate the curve to profitability by avoiding all of the unnecessary trades and those unnecessary downs and like those unnecessary like drawdowns in their P&L by staying out of trades that they don't actually have to take. So really, as a trader myself, I've become, there's no really end goal, but I've been through it all. I've had winning streaks, I've had losing streaks. Like I think last year or 2 years ago, maybe, I took 16 consecutive losses, which is like I could have flipped a coin and bought or sold, and I would have not taken as many losses. And that really sucked for me. Like I was like, what is happening? Like, how is this even possible? I could have flipped a coin and done better on whether to buy or sell. But that's just something that it's because of the psychological aspect. And it's because I was like being stubborn. I was trading with my emotions and not listening to the data. Like the data was showing one thing and I was doing another thing. But when you have this data and you listen to it, that's where you can really like avoid the dumb trades. Most people don't actually. I'm actually curious in your experience, and I'm gonna like ask you a question here. The biggest losers that you have, are they trades that you can justify? Like, are they actual trades that you can say, it was a planned entry, planned stop loss, and planned profit target? Or was it you were tilted and you sized up too much, or you kept trying to like pick a bottom or pick a top? I'm curious, for your larger losing trades or some of your largest losing trades, were you tilting or were you focused on an actual like good setup?
That's a great question. So I like to kind of write off or siphon any loss that I have as one of 2 different kinds. We have the losses where your theory is just invalidated, which again, just for the psychology and the mentality of trading, if I can look back at that setup and still say I probably would have taken that again, then I feel much better about losing on that trade. This morning I had one where, my entire criteria was there and I took the trade in, we ended up just continuing to fall, which I'm totally okay with. And the losses that like you're pretty much referring to here, is like I like to call these kind of the dumbass losses. Where if I don't have the data or if my criteria is not met, but I'm taking a trade based on if my reason for taking a trade starts with I feel or I think, then I'm not a fan of it. And I really do like, and I really do enjoy edgeful data, because this can also validate, my thesis or confirm some of my theories, and I totally agree. And, like, this is all a psychological game at the end of the day. And, if you can look back and say, I still would have taken that trade, I think that I'll do that 10 out of 10 times. Like my loss this morning, I would still have done it over and over again because, again, I just know that I have evidence and historical data, backing the trade that it's here. There's things to support my theory. I have to ask, and this is a question from one of the listeners, and, this is probably a little bit off topic, but what is the best report that you guys have, for swing traders in the Forex market?
Good question. So just so everyone knows, edgeful is more tailored. Like we just have more reports around scalping and day trading. We have reports around swing trading. So if you go to this report discover page right here at the top, and then you go to the swing trader tab right over here, you're going to see all of our swing trading reports. Just so everyone knows, this report discover page is where you can really explore what we have to offer. So this is where you can filter for price action reports or volume reports or session analysis or swing trading specifically. And this is really where you can go and learn about what we offer. Now, each one of these is going to be broken down by a certain section. So you can see I'm on the swing trader report tab. And we're looking at, this is the chart patterns, this is the market open and close strategies, this is the performance tracking, this is the range and trend analysis, etc. So for swing traders, one of the things that's actually very interesting, specifically in, I mean, it applies to anything really, but if I go to this opening week range right over here, this report is actually very interesting. And what it does is, let me just open this up and let me just go to a higher time frame for a second. Just give me 1 second. So I'll go to a full week. Perfect. Here's a good example. So what this report looks at, and this applies to futures, Forex, and crypto, and it also applies to stocks as well. But what this looks at is the opening week range. And specifically here, you can see down here, I have Monday and Tuesday selected. So what that means is I'm looking at the high and the low made on Monday and Tuesday. So the combined high and low of Monday and Tuesday, which is right here and right here. And my Monday and Tuesday ends right here. So this is my opening week range now, right over here, this area here. So you can see that in the last 6 months on ES, and this can apply to really anything. So even if you were to go, and even I can go to like Euro USD or whatever. And you can see here that in the last 6 months, 50% of the time, price broke the opening week low on Euro USD, which means that price would be breaking down here at this point. Now, 38% of the time it will break the previous week's or the opening week's high. But what actually really, really stands out to me here, and this is the more important one, not whether it's going to break the high or the low, but most importantly, you can see here it broke both sides. This gray one only happened 11% of the time. So that means that once price breaks out of one side, you do not want to expect it to break the other side in that week. And then here you can see stayed inside that range. So stayed inside the high and the low of Monday and Tuesday 0 times in the last 6 months. So what that means is you want to target one side. So when we're in this range, you want to target either the high or the low, but you definitely, once one price touches one of them, you definitely don't want to target the opposite side as well. Does that make sense?
That makes total sense to me.
Yeah. So that's one of the best reports that I think for swing traders, because specific to Forex, because these levels plot out every week no matter what. It's not like this is something that can't set up. So you always have a high and a low made on Monday and Tuesday, and then you can target one of the sides, but not both sides. And one thing, again, just make sure that you look at this, like the data is different, obviously, for every pair. The data is different for every like futures contract and stock and everything else. So just make sure that you're looking at the correct, or like this data doesn't apply to everything is the important piece. Make sure that you're looking at what data, like specifically the data that you want.
I absolutely love that answer, and I can't really call myself a Forex trader. I don't really have my foot in that door. But, I could see how this information also, correlates and, can be transferable towards S&P traders, towards futures traders, towards options for all of the markets, basically. And I'm a huge fan of that style of report. Honestly, I got to say, I totally neglect looking at longer time frames and, longer spans on edgeful. That totally looks like I'm leaving money on the table there. And, that's pretty interesting to me. I have to ask, if you could get one famous trader, somebody who could be alive, they could be dead, like you can throw anyone out there, Warren Buffett, you name the person that you want, to try edgeful, who would this person be? And what do you think that they would say about it? Or what would you want them to, really try?
Are you familiar with Jim Simons?
I can't really say I am.
So he's the guy who owns Renaissance Technologies, and he owns the Medallion Fund, or he runs a hedge fund, obviously, and he owns the Medallion Fund. I think he's generated like on average annual returns since the 80s or 90s of almost 50%. He's outperformed every single fund in the world without question. Like, it's not even close. The guy is a super genius, and everything he does is completely automated, all using data, all using historical data, like very similar to the way that we do, obviously like in a much more complex manner because he has billions and billions of dollars. But I would love so much if I can have him use edgeful and see what he would want to add in here, what he would like, what he uses, like what reports he'd want us to build, and even just talk to him about his philosophy around like trading and the markets in general, because the guy truly is, there's nobody that compares. Not Warren Buffett, not Bill Ackman, not Ray Dalio, not the S&P, obviously, not the NASDAQ. Like, he blows everybody out of the water. Like, it's not even close. And I would love to just have a conversation with him about that, and about like trading in general, and about how he likes to build his algorithms and what type of analysis he does. He is an absolute icon, a legend in this space. And if I could choose anyone, it would without question be him to use edgeful, and just even to talk about trading with.
That's a great question, man. And, I got to ask, if you could pitch him one of the edgeful reports, which one would it be?
I wouldn't say that it would be one. I would say that it would be a combination of a few. So some of the reports they're a strategy in themselves, like the gap fill report. Some of the other ones, like the initial balance, is completely different. Now, this initial balance report for NQ right now has ridiculous stats. So right here, what this looks at, and what this measures, is how often does price break out of the initial balance, which is the high and the low of the first hour of trading. So here we have TradingView indicators that you can go to. So I'll show you how to get them right now. But this indicator will automatically plot the high and the low for me every single day. So in this case, what I'll do here is this is a good decent example. You can see price only broke out to one side on this day. Price only broke out to one side on this day. In this case, this was actually a holiday, but you can see that's actually not the best example, but it did break out to one side there and one side here. So 80-something% of the time, the NQ will only break out of one side of the initial balance. Now, this gives you a very strong bias, obviously, but there are other reports that I would layer on top of this to say, if you use the initial balance plus this, plus this, plus this, now you have a setup that is absolutely A+. And I would say, I would actually recommend that he looks at these different ones. Now, I will actually show you what they are. And this is a setup that I've recently found, considering this market environment. I mean, do you want me to show you what it is? The setups are insane. Like, the probabilities are insane.
I'd love to see it.
Perfect. All right. So there's a great example on February 5th, actually. And it's right over here. Where is it? February 5th. Let me go to a smaller time frame. I'll go to a 5-minute, and I'm going to show you guys some pretty insane stats right now. So this is really the way that I recommend using edgeful, is to start to combine different reports. So it might seem complicated as I do this, but trust me, once you get the hang of it, this is like I can't even explain how ridiculous these stats are going to be in just a second. So starting out, if you go to my bookmark, so I recommend screenshotting this. Starting out with the inside days or inside bars report. Now, what this report looks at is how often does price today open within the previous New York session. So you can see right here, this is the previous New York session. Here's my previous day's high. Here is my previous day's low. Oh, sorry about that. Here's my previous day's low. You can see very obviously this New York session opens within this range. What this report looks at is how often will price break out of either the yesterday's high or low for every time we open inside of the range. So 75% of the time, for when we open in here, we're either going to touch the high or the low. So now we have a bias where we have a targets, we have targets, yesterday's high or yesterday's low. Because 75% of the time it's going to get there. Now we go to the opening candle continuation report. This report looks at if the first hour of the session is green, how often does the day close green? If the first hour is red, how often does the day close red? So you can see in the last 6 months, if that first hour is green, 83, almost 84% of the time, the day has closed green. So super bullish bias here. And we have an indicator for this called the opening candle continuation. So it will automatically plot the first hour for you. So you can see right here, my green little box, that is my first hour, and it's green, which obviously means it was bullish. We also have it in the what's in play section up here. So every day it'll automatically tell you whether the opening candle is red or green. Today, it was red. So now that the first hour on this setup is green, we are leaning towards targeting yesterday's high. So we know that 84% of the time, price will close green today, so that's a bullish bias. 75% of the time, we want to target this previous day's high. Now, let's go to the initial balance report. And this, like I mentioned, is the high and the low of the first hour. And like you can see, 83% of the time, price will only break out of one side. So now price breaks out to the top side here. That's another extremely bullish bias. So now we have even more confirmation to target this point right here. We have two reports that are over 80% that are going to tell you that we're going to have a bullish day. You can see here, once price breaks out, you do not want to expect price to break back down because only 15% of the time price is going to break both sides of the initial balance. So we have our target, we have our bias. Now, what about our entry and our stop? And I'm not going to say use some fair value gap or whatever else. I'm going to give you data-backed results here. I'm going to give you data-backed entries and data-backed stops. So the next report that you need to look at is the initial balance, the sub-report here to the left, the buy retracement variant of this report. And if we look here, you can see, let me just fix my customization. So I have my customization set to 25, 50, and 75%. Just so you guys know, I'm going to explain what this actually means in a second. So what this report looks at is only on days that break one side of the initial balance after the first break. So after this candle right here, and I'll make this bigger. So after this candle right here, how far back inside of the range will price go while still being a single break day? So pretty much, you can see here that 65% of the time after the first break, price is going to reach the 25% retracement, which is right here, automatically plotted for you with our indicator. You can just put on the 25% and the 50% right here. So you can see after price breaks out, 65% of the time, it's going to come back to this point. So what that means is you want to be looking to enter right here at the 25% mark. You want to target the previous day's high because 75% of the time, price is going to break out of this high. 80%, 84% of the time, price is going to be bullish on these days because of the two reports, the opening candle continuation and the initial balance. Now, if you were to enter at the break of the initial balance, you pretty much are saying 65% of the time, you're going to be in drawdown at least to this 25% mark. So you don't want to enter at the break. Now you know here that only 26% of the time is it going to reach the halfway point of the initial balance while still being a single break day. So you can put your stop right here at the 50% line. And now you have almost a 4R trade with your target, your bias, your entry, and your stop all based on data. So to summarize, if I were to show Jim Simons any report, it would be this group of reports and this setup as a whole to be like, what do you think about this?
Man, my jaw is dropped right now. That's crazy. That's a great R to R. I don't even know where to start. You know, that looks very high probability, you know, that like we literally have evidence that that's 76% of the time. And, you know, I love that we have our stop literally calculated. Everything is predetermined. And this is all these levels, all these targets are all calculated using exclusively edgeful. This is absolutely incredible. I'm just in shock right now. That was by far the best trading strategy I've seen, or one of, in my opinion, the best thing I've seen on edgeful right there. It was just insane. You know, I have to say, man, I'm beyond impressed. You know, and it seems like the listeners are as well. You know, we're coming over towards top of the hour. I want to say, is there any other comments or anything else that you really want to get in, or anything that we've failed to touch on that you want to touch on?
Yeah. One thing that I think a lot of people come into trading, and you know what, myself included, and you have these expectations about how quickly you're going to be profitable, how quickly you're going to make money, because you see all these people online making money and you think, I can do it too, and you can do it. But you just have to extend out the amount of time that you're willing to commit to trading. So if you're going to give yourself 3 months, probably not going to last that long. But if you give yourself a year or 2 years, 2 years is for sure you can do it in 2 years. I mean, as long, obviously, if you're committed. But if you're going to trade with your emotions, I can guarantee you that you're not going to be successful. If you're going to trade based on your gut feeling on whether you think price is going to go up or down, I can guarantee you you're not going to be successful. The most successful people in the world, all the hedge funds, all the amazing traders that you see, they all use some form of data. And that is because these markets are dynamic. They change every day, they change every month, and you cannot go based off of your gut feel. What we try to do at Edgeful, and what we're doing to a bunch of traders, if you look at if you go in our Discord, we have like a user reviews and a profits channel. You can see how these people, like their trading is completely changed, because they're not only are they taking high probability setups now, like the one I just showed you, but they're also avoiding losing setups. So there's really two pieces, and what we do is we accelerate that curve to profitability, because you now have physical, tangible data that you can use to take or to not take a trade. And truly, Edgeful pays for itself. It's $49 a month. We have one plan. You get everything. You get 35 indicators. You get all of the assets. You get all the reports. You get the entire time frame going back up to 5 years. You have the what's in place section, which we didn't even touch on, which is telling you when these reports are setting up, how to take them, what your bias should be. And you get literally everything else, which I can't even begin to start to mention. You can make custom reports. You can get on calls with me. There's a bunch of other stuff. It pays for itself literally with less than the profits of one trade. So my piece of advice is give yourself some time to figure out what suits your personality, and don't trade with your emotions, because flat out, it doesn't work. You cannot trade with your emotions. You cannot be successful over the long term with your emotions. You need to have data on your side. And Edgeful is the tool that will be the easiest way for you to digest and apply the data to your trading.
Great answer, man. I gotta say, that I'm beyond impressed. This stream definitely exceeded, my expectations, and I have to say, just alone with that previous strategy, I'm in shock. And I still see the take profit, and I see the stop right on the screen. It's absolutely amazing. Just seeing this. I gotta say thank you for coming on the stream. It's been a blast, man. I'm beyond stoked. I'm sure that there's many listeners that really enjoyed this as well.
Yeah.
Edgeful by far, like I didn't even know Edgeful was by far this capable of creating, literally precise levels of take profits and stops. This is amazing.
Yeah. No, I appreciate it. It was a pleasure speaking with you. Great questions, by the way. It's always nice when we have a good conversation around questions, which is good. So I appreciate it. I appreciate everyone who's watching. We have a free trial, by the way, for anyone who's not aware. We have a 7-day free trial, so you can definitely try it out. I highly recommend it. It pays for itself. So,
and where would listeners be able to find this free trial?
Edgeful.com. So if you just go to edgeful.com, there's a 7-day free trial. Here's how to spell Edgeful. If someone doesn't know how to spell it, it's right here. It's also on the stream, like on the top right. You can look there. It's just Edge and FUL. So if you go to edgeful.com, or you just Google Edgeful trading or Edgeful at all, it'll all come up, and you can just go right there. The free trial is right there.
Amazing. Ladies and gentlemen, make sure you guys are following the Edgeful account. They're posting plenty of free value every single day. And, I got to say, thank you for coming on the stream.
Appreciate it, man. All right. Have a good one, guys.